can really use this? I think of who are good candidates for using this. And the first one is usually the most obvious one that people think of is people that are having a cash flow problem or are about to. So if people are distributing assets out of their retirement accounts just to afford to make the monthly payment on their mortgage, there are a lot of reasons why that might not make sense, right? You're taking assets out of your retirement accounts just to buy more equity in your home. What's the point in that? If you can make that payment optional, leave those assets alone, they could last a lot longer that way. But that sometimes takes some forward thinking by an advisor to catch that, because a lot of times what people do is they just let that happen, and then all of a sudden their retirement accounts are gone, and then they get a reverse mortgage to salvage whatever's left out of their house, the equity there, and that puts them like, thank goodness for that. At least that's an option. But they could have lasted a lot longer if they'd made it a part of an overall integrated plan and balanced those things and understood it more correctly. So it's best to get ahead of that.
That's so powerful about what we're going to see here in a few minutes where we model this in the planning software, is that you can just see the impact of what might happen. So it can be really powerful to optimize a plan based on access to this equity that you wouldn't have before.
Yeah, I mean, that's why people need financial planners, is because they need to it's called planning, not reacting, right? Get ahead of that and help them survive retirement. Yeah. Another category, and this one is a little bit tongue in cheek because it applies to almost everybody, but anybody who's uncertain whether or not they have enough resources to fund their retirement, which is, I mean, because certainty is such a high bar, basically everybody is uncertain. Like, what percentage of our clients are 100% certain that they'll have enough money to live the rest of their life no matter what happens? It's like, well, zero, because certainty is too high a bar. But making your home equity liquid just in case, that could provide all sorts of solutions that may come up or may not, but at least you've got that arrow in your quiver.
Yeah.
3 is sort of a subcategory of number 2, but people concerned about funding long-term care expenses. Maybe they can't get a policy, or for whatever reason they don't want to, or they can't qualify or something like that. This just adds more fuel to the plan of funds that they could use if they need to make those if they have those expenses come up. If you don't have any kids, or your kids are established, or you spent a heck of a lot of money on their education and now they're doctors or dentists and they don't need your money, like, why not use your equity to check a couple extra items off your bucket list? If you don't, you're just going to leave them more of an inheritance. You can spend that. You give away your wealth to your kids and grandkids while you're living to see them enjoy it and to provide some guidance and mentorship. And a lot of times people's reaction to that is, yeah, but if I do that, then it's going to accrue interest until I die. And the answer is, well, remember, that's normal because you haven't sold the asset. That's the same. If I give my grandson $20,000 to pay for a year of education, then that's $40,000 I won't have 10 years later. Remember, that's the same thing. Selling an asset and foregoing the future earnings is the same thing as borrowing against assets, or borrowing the money instead and keeping my assets and letting them grow. And then both sides of the balance sheet can offset each other. For some reason, we look at equity differently in our homes, but we shouldn't. Fundamentally, that's not correct. It's an emotional thing. So if you want to just live a better life and you don't care about what your kids get, or you don't have any children, then why not bring the home equity into a part of the plan and live a little bit better for the last decade or 2 of your lives? Clients that want to consider Roth conversions, there's some awesome strategies with reverse mortgages to have a Roth conversion plan in place. Sometimes I'll get, people, this is often accountants that will say this, they'll have a knee-jerk reaction and they'll say, well, yeah, but a lot of people don't itemize their taxes, so they won't get to deduct that. And I'm like, well, you're still stuck in the thought of a normal mortgage. But with a reverse mortgage, if you wait 10 years and let it accrue and you have a $230,000 or whatever, 1098, you're going to itemize in that year, right? You'll itemize that deduction. The other thing I think of is what you just said, John Michael, where we talked about this cool strategy where if you have a reverse mortgage that is deductible, you can literally offset the taxability of a Roth conversion up to a certain extent. But that extent is very large. We're talking 6 figures here. It's not limitless, but it's big. But you talked about, well, maybe somebody doesn't have a deductible reverse mortgage. They live in the home that they like. They don't want to move. And doing a cash out distribution out of a reverse just to pay taxes on a conversion isn't a tax deductible type of mortgage, and that's okay. And you can just use the line of credit itself to pay the taxes on the conversion. And I've heard advisors say, yeah, you don't want to do that though, because the interest that will accrue over time will offset the tax savings of the conversion. And I interrupt that and I say, hang on a second, like you're forgetting what I call the net wealth concept. If I would have sold other investments to pay the taxes on the conversion and foregone all that growth, that's the same thing as using the line of credit. So if it's worth converting, What I use to pay the taxes on the conversion, whether I sell investments or use the line of credit, is immaterial.
And if you have to pull money out of a tax deferred account like an IRA, like a traditional IRA, you not only are foregoing the future earnings, but then you're paying taxes on that because you have to take it, take it out in that year that you want to use it. So it can be so powerful for these I think in a planning sense to leverage reverse mortgages for
Yeah,
sure.
we're adding one more lever to the like the cockpit for the financial advisors that is very powerful, has lots of cool uses.
Absolutely.
The next one is just clients purchasing a home. Like I would go so far as to say that if somebody's over 62, they should be using a reverse mortgage to purchase a home. Because if they were going to pay cash for the home, why not preserve some of that and leave it alone and preserve the taxability of distributing those assets and let the reverse mortgage make up that difference? That way you're spending less money to buy it and you're creating for yourself future deductions that you can tinker with,
Yeah.
and you've got that asset in your possession now. Or in some cases, people sell their house and all the equity they have left is, let's say, $300,000 or something, and they want to move closer to kids, but the houses there cost 500, and they're like, well, we can't really afford much, and we don't want to sell other assets, or maybe they just don't have other assets to sell to buy the house. Well, they could afford a $500,000 property with a $300,000 down payment if they used a reverse mortgage or something like that. The numbers are going to be different depending on their age and depending on certain things, but those are
Sure.
close. Like, yeah, that's reasonable. And then back to the example that we used earlier, there's a lot of people that are living in a home that just isn't right for them, but they don't know that moving is an option, something that they could actually do. And this makes that option possible for them. One thing that I come across a lot, in fact, I suspect we just started working on one that I suspect this will probably happen. She's living in a home that needs some repairs and just doesn't have the resources to, it doesn't have the resources that she wants to access to make the repairs. And so this was a referral from a realtor who said, can we help her? And I said, well, yeah, let's look at some numbers. And what's happening is we can give her the funds that she needs to repair the house. But a part of that conversation is, look, ma'am, we can make this work. The numbers line up. We can do this. But are you sure you want to do this? Because one of the options that you have is, what if you just sold the house and used a reverse mortgage, use your equity to go get a house that you want to live in? Because we can fix this roof or whatever it is that you need. We can give you the funds to do that, but it's still going to be a 2-level home. Is this really where you want to stay? And for the reasons that we talked about earlier, where she didn't know that she could take her equity and go buy something that she actually wanted because of she thought, well, I've got this low rate, I could never replace that. And I've got, when I take my equity out, I can't really buy what I want to buy with cash. So I guess I'm stuck because I don't want a new mortgage payment. This sometimes becomes an option for them that they didn't know was available. And it's all because this is a tool that they've misunderstood. No one's really talked about the strategies that they could use with this. So I suspect that she probably won't stay there. She'll probably like, well, yeah, I really don't want to have 2 sets of stairs in my house. That doesn't really make sense anymore. Why don't we just do that? But if she wants to stay, that's perfectly fine, and we'll do that too. This is one we could talk about for another hour. We won't. But people who are supporting their parents financially, if their parents live in a home that has plenty of equity, they shouldn't be doing that for a couple of reasons. First of all, it's not tax efficient. Second of all, you're giving money. Let's say I had clients that were giving their parents like $10,000 a month to pay for their medical expenses. That was on the high end, but this isn't unheard of, right? This is a common thing. But if I'm giving my parents, let's say my mother, let's say my dad has passed away, let's say I'm giving my mother $5,000 a month and she's living in a $700,000 paid off home. Two things are wrong with that. First of all, what I'm doing is I'm pre-funding my inheritance. And if I have siblings, that gets really messy because when my mom passes away and we inherit the home and I have to say to my siblings, hey, by the way, I've given mom $120,000 over the last, 2 years. I would like that plus interest back before we split the equity. And I would like my portion of that as well. Nobody's arguing that would be the fair way to do it. That's exactly what the family should do. But I can't imagine that conversation going smoothly with my siblings. I mean, my siblings are great. It probably would be fine, but I can imagine a scenario where me wanting a portion of that equity for myself first because I helped mom financially before I get my portion of whatever's left. I could see that getting very tenuous with families. The second reason that's a really bad idea is my mother has her own money. If If I were getting $5,000 a month from my children and they had children that could be using those resources for their lifestyle, that's humiliating to me. And I do not want to be that burden on my children's lives, especially if I have the wealth. I'm living in it. It's right here and it's accessible to me. It doesn't make sense for children to fund their parents' needs if the parent has wealth, right? They would never do that if they had the money in the IRA or a Roth or some other retirement account or some other investment account. They would never do that. They'd say, no, spend your investments. Oh, they wouldn't say no because the parents would never ask them to do that. But for whatever reason, we think the home behaves differently, but it really doesn't. The reverse mortgage is what makes that equity liquid, and they can use that money. And then if they run out, then the kids might need to step in and help. But why do that while they still have the wealth? It doesn't make any sense. You're just pre-funding your own inheritance, and essentially you'd be giving that to some of your siblings unless they pay you back plus interest.
Absolutely.
The last one, this comes in handy quite a bit. People who are divorcing, and that's happening at kind of an alarming rate for people in that age group. But divorce can be tricky financially. In a lot of cases, you're coming across a scenario where one of them owes the other one $300,000 worth of their $600,000 equity in their house, but they don't want to move, or one of them doesn't want to move. That can be tricky to come up with that amount of cash if they don't have other liquid assets to try to balance that out some other way. It can be helpful because it can provide liquidity without encumbering the person who's staying in the home with a monthly payment for the rest of their lives. So it's another way to create liquidity that can be very useful in a divorce situation.
So Brady, I mean, you're clearly very well versed in not only how the products work, but how to implement them and what strategies to use for a specific client situation, or just in general to get set up. Should they just reach out to you directly using your contact information?
That is the best way to do it. So I handle a team of reverse mortgage lenders, and I help them understand the financial planning process so they're well versed in how to serve financial advisors best. So I get involved with our lenders and our financial advisors. They're the ones that actually do the loans, but I'm the one that helps them with the resources they need to understand how this integrates with the financial planning process. So I'm very available, and that's my job, is to help our lenders serve financial advisors. So I'm the best person to reach out to, and I'll help you get the help that you need.